Welcome everyone to our webinar today. My name is Rehman. I'm the principal lawyer at the Rehman Sheriff Group. Our firm is a leading immigration law firm. We focus primarily on the employer-sponsored visa programs, the 186, the visa, the 482 visa, and we also help businesses in Australia fill their skills shortages. Quite excited about the webinar today on exploring the New Zealand Active Investor Plus visa. With Australia's 188 visa closing, it is good to see our neighbour come up with an investor stream that our clients can potentially consider. So I'll start with introducing our speakers for today. Rabiah, Khawaja, who's Head of Immigration Senior Associate at Cavell, Leitch. She is a seasoned immigration lawyer based in New Zealand with extensive experience advising high net worth individuals and businesses on complex immigration matters. And we also have Enda Stankard, who's the Managing Director of MA Financial Group. Enda has over 24 years of experience in investment banking and asset management, including 13 years specializing in investment migration. He is one of the pioneers of the significant investor visa in Australia, which unfortunately, as I just said before, the 188 visa has closed in Australia. So with the presentation flow, Rabiah will be speaking first, covering an overview of the Active Investor Plus, recent changes to the program as of April 2025, visa eligibility, investment categories and compliance requirements, Immigration New Zealand's role and policy updates. Enda will follow, presenting investment structures under the AIP visa, MA Financial and Elevation Capital's fund offerings, case studies and performance of relative investment vehicles, strategic insights into growth and balanced investment categories. With the webinar schedule, we're starting at 11 a.m. and I will also speak to, Rabiah will be speaking for about half an hour and will do about the same. We will leave all questions reserved for the end of the session. Kindly stay muted during the presentation unless invited to speak. Use the chat box to submit questions at the end. And the webinar will be recorded just for internal reference. With that said, over to you, Rabiah. And Guada, could we move along the slides, please?
Wonderful. Thank you so much, Farhan. Kia ora koutou, everyone, and welcome to this webinar on the Active Investor Plus visa stream. As Farhan has kindly introduced, my name is Rabiah and I am the Head of Immigration here at Cavell Leitch in Christchurch, New Zealand. It's fantastic to see great interest that's been generated in this visa stream, which is New Zealand's key pathway for high net worth investors. Over the next wee while, I'll be guiding you through the essentials, what the visa is, how it works, and most importantly, how we can make it work for you. That's me again. So at a glance, the Active Investor visa stream, I'll refer to it as the AIP stream, just easier to kind of get through, is one of New Zealand's leading investor visa streams at the moment. It's a direct visa pathway, so it's not a temporary step, and it's designed to align investor capital with New Zealand's economic priorities. It's capital based, making it the fastest resident route available for investors, provided the requirements are being met. And so far, as Farhan mentioned, this visa stream has been open since 1st of April 2025. It is a revamped version of the previous investor stream, and the numbers are speaking for itself. We've got 267 applications that have been submitted so far, with potential investment of 1.5 billion New Zealand dollars. So uptake has been considerably strong. The popular countries from around the world that we are seeing a high number of applications coming from are the USA, China, Hong Kong, Germany, Singapore, and Taiwan. We've got investors that are coming from other areas of the globe as well, in regards to the global events that are happening or political events that are happening in their own country. New Zealand has been considered to be a favourable destination, and this visa stream definitely opens up a bit more scope for individuals to either travel to New Zealand, invest, and also reside here. So far we've had, as of 1st of July, let's go back to the previous screen. 1st of July, we've had 4 applications that have been granted, 86 approved in principles, and you can see the difference between the two growth and balance categories that I will get into in a bit later. The most attractive part of the stream is that the average processing time is only 12 working days, meaning that the numbers show both demand and also the government's response to processing these applications expediently and also pretty efficiently. So how does the process actually work? It does involve a 7-step process, and I will go over these briefly. Essentially, you start by looking at accumulating the information that's required for the application process, and that includes establishing eligibility, confirming the source of funds, and choosing between the growth or balance category. You may do this with the assistance of a legal representative and also a financial representative, which generally is encouraged, just in light of the amount of complexity that's involved in gathering the information for the stream. Once your application is lodged and your eligibility requirements are met, Immigration New Zealand will issue you an approval in principle. That's after they've conducted their due diligence checks. Step 3 involves a pretty vital step in terms of transferring your funds to New Zealand. Immigration allows for a 6-month period to transfer the funds, and if in the event it is unreasonable to do so, they do grant an extension for up to another 6 months. Step 4 is another very important vital step. Once you've transferred the funds and the funds have been invested, that is when you'll be granted your resident visa, and that'll be when the investment duration commences. So essentially, and I'll again get into this in a moment, the investment periods are either going to be 3 years or 5 years, and then you'll have different presence requirements that are met for that, and that starts from the date that the funds are transferred and also invested. Step 5 to 6 are essentially compliance and monitoring steps, where immigration will reach out to you to provide evidence that the investment has been maintained over the period required. Once that has been completed, the Section 49 conditions can be removed, and the last step would be granted permanent residency in New Zealand, which allows for indefinite stay in New Zealand and also indefinite travel. And here's a bit of a snapshot just to give a comparison between the growth and the balance categories. So the investment amounts do significantly differ, with growth being 5 million, balance being 10 million. We are seeing, as you've seen in the previous slide, a lot of interest in the growth category, predominantly because of the lower funds. But that's not to say that you may see more uptake in the balance category as the stream gets a bit more open. The investments for the growth category are under direct investments or managed funds that need to be approved by NZTE. The NZTE have their New Zealand Trade and Enterprise have their own website where they actually list the approved direct investments and managed funds called live deals. So you are able to go on the website to review the kind of investment options that are available for you. And for the balance category, you are able to invest in a number of different diversified investments that I'll get into in a moment. The period of investments do differ as well, where the growth category allows for 3 years and the balance category allows for 5 years. The transfer time to transfer, as I've mentioned, is 6 months for both. The presence requirements do differ again. So for the growth category, you only need to spend 21 days over the 36 months. For the balanced category, you need to spend 105 days over the 60 months. And as you can see, you are able to get a concession from about 14 days to 42 days if you do, provide further funds on top of the 10 million. It's important to note here as well that only the principal applicant needs to meet the presence requirements. So if you are applying with your partner or your children, they don't actually need to meet the presence requirements, but they just need to travel to New Zealand within the time period allowed to activate the resident visa once it's been granted. And the checkpoints are just between the 24-month mark and also the 36 and 60-month mark. Just looking a bit at the growth category and the acceptable investments. So here again, you're looking at 5 million. The category is about active capital, direct investments into private businesses across key sectors in New Zealand, which are technology, food and beverage, aged care, renewable energy, infrastructure, and also primary sectors. Or you've got the option of approved managed funds with private equity or venture capital. I'll leave all the financial talk to Enda, so not to cross over into that. He's much more learned in providing that information. And again, the minimum investment period is 36 months. And it essentially is designed to allow for investors who are ready to fuel New Zealand government's strategy about going for growth. Then we have the balanced category, which takes a bit of a different approach. So here it's 10 million, a minimum investment, but it allows for greater diversification. So you look at listed equities and bonds. You've got residential, commercial, and industrial property developments, philanthropy as well, and also it does cater for direct investments and managed funds as well. There are, the most attractive part about the balance category is the property development, and we've seen quite a lot of interest and questions about the ability to invest into property development. And there's a key few things to note about this in particular, is that when you're looking at residential property, it can't be a singular property, so it has to be multiple dwellings that can lead to increased housing in New Zealand, and are also capable of commercial return. And for the new and existing commercial industrial properties, once again, it has to be capable of commercial return. It does exclude renovations or extensions to existing properties. And when you are looking at improvements to existing commercial or industrial properties, the improvements must be material in nature and form a substantial part of the investment, which allows the property then to be used for business purposes. The residential property cannot be lived in by the principal applicant or any dependents, partner or dependents that are noted in the application, as well as any relatives as well. And if a certain development is part of a managed fund, they can only still be used for the balanced category and not for the growth category. These are just a couple of key considerations when looking at residential and commercial industrial properties. This kind of gives a snapshot again just of the application process about what is required and what needs to be met. Thought I'd just put in there to just check up again. Move to the next one. So there are a number of key application requirements that are all also very important to note. One important part that immigration is quite strict about is to demonstrate the lawful earnings and source of funds. Now, this can often be an issue for a number of individuals, especially if their earnings or their source of funds are based upon, a number of years, which could be from 10 to 30 to 40 years ago, based on their employment, based on their investments, term deposits, etc. And so it's really important that your documentation is quite clear and all the funds are able to be traced back. A lot of the time we see delays where, there are missing links or there's gaps in the property, in the documentation, so immigration isn't able to have a clear trace of where the investment funds are coming from. And the last thing you want to be doing is taking this step and investing the money and the risk that's involved in the investment of this money, only to find out that you don't have enough documentation to actually prove what you need to do. So a lot of the groundwork here is actually done right before you apply, which again, it's really important to get help if you need it. Lawfully earnings, the lawful earnings have to be from legitimate sources. So there's a number of key requirements that can be found in immigration policy about the types of lawful earnings that are acceptable to Immigration New Zealand, alongside the kind of evidence that needs to be produced. So, for example, if it's coming solely from your employment, it needs to be, tax documents, pay slips, employment agreements, bank statements, and it's not only just one piece of documentation. We definitely recommend providing as much documentation from a number of sources to actually show the employment. Similarly, if you've got term deposits, again, a trace with the bank to making sure that everything can actually be seen quite transparently. Another issue that we often see is the way that the funds are transferred. So Immigration New Zealand allows for transfers to occur between bank-to-bank transfers, or through a foreign exchange company or a money transfer business. Now, again, if you're transferring to any external organisation, again, it has to be bank-to-bank. So, for example, you can't make cash deposits into, the foreign currency exchange company because that's not traceable. So it just has to be something that, again, needs to be traceable. Another really important factor is maintaining the investment over the 3 to 5 year period. That's what's known as the Section 49 conditions, in addition to the presence requirements as well, which form the crux of what the conditions are. Now, if you fail to meet those requirements, it does run the risk of the visa possibly being affected. And so it's really important, again, to work with your financial advisor in the 3 to 5 year period to make sure that those investments are maintained. And all records are kept intact as well. So it is a bit of a journey. It doesn't stop just from when you get the residence. It is a 3 to 5 year journey that you're going to be on with Immigration New Zealand. And so record keeping is really, really important. Positive points, there's no English language requirement anymore, meaning that it becomes more open to more individuals from around the world, which is great to see. Your partner and your dependent children up to the age of 24 can be included, provided they are solely dependent on you as parents. And there's no limit to the amount of dependent children that can be included. So if you have 5 to 6 to 8 children, that's no issue, as long as they continue to basically be dependent on you. Health and character requirements needed to be met by every individual as well. So that's just general health and general police checks that need to be provided. A fit and proper person leads into making sure that there hasn't been any issues, for example, with financial fraud or anything to do with bankruptcy that may affect your position to be a fit and proper person. And I'm just kind of bouncing off what I was saying before about the compliance conditions, just making sure that it's maintained. Your Section 49 conditions are all met as well. Document record keeping for the periodic reporting to Immigration New Zealand is vitally important. And again, that's the role that representatives play in essentially assisting you with this application. Which is really, really important, because when immigration does their second yearly check and their last yearly check, everything needs to be in order to be granted that permanent residency. So this is kind of segueing into what Enda will be talking about, but it's really important to have financial advisors on board. They do assist with, again, risk profiling and portfolio construction of what the investments will look like for you. As you know, immigration lawyers, we aren't able to advise on the financial impacts of certain investment types. We can give you an overview of what would be required, but it's really important to check with financial advisors to make sure that your investments are solid and also your investments are secure and you're aware of the risks that it involves. And so it's really important to collaborate with them. They often work with legal representatives and also tax advisors to ensure that everything is above board. So just bringing it all together, as I said, the growth category is the most prominent and popular one at the moment. 5 million invested. 21 days you need to spend in New Zealand over the 3-year period. And with the balance category, it's 10 million, and you've got 105 days to spend over the 5-year period as well. And so these are the two most prominent ones going forward. And ultimately, success is also about just carefully planning, correct structuring, and ongoing monitoring. That essentially will lead to a successful application and a successful permanent residency visa in the end. So these are kind of just, I guess, helpful hints if you're kind of looking at, deciding between what option is best for you based on your funds that you have, and, understanding the best direct pathway for yourself.
Thank you, Rabiah. Over to you, Enda.
Okay, thank you, Farhan. Just checking you can hear me okay? Sound is all right?
While you're checking your sound, is my sound okay? Because I got a message that it was a little distant. Can you guys hear me clearly?
A little bit low, but we can hear you.
It's a little bit low, but you're okay.
No problems.
Okay. Thank you, Farhan. Thank you for inviting me to speak today. And it's great to be on here with Rabiah just to talk a little bit more about the New Zealand Active Investor Plus visa. So as Farhan and Rabiah have said, I'll cover a little bit more about the investment side, about what the investment requirements are under the AIP program, and also share a few observations on the program that we've noticed so far, and including on how it differs to the Australian program. Next slide, please. Next one. So my name is Enda Stankard. I'm a managing director at MA Financial Group. As Farhan has mentioned, I've been working in the industry for over 24 years, and specifically in the area of investment migration for the past 13 years. In Australia, we were one of the largest players under the Significant Investor Visa Program, which was the equivalent program that Australia ran for a number of years. As Farhan mentioned, unfortunately, that program is now closed, which is probably a topic for another day, but it's been to New Zealand's advantage. And what we've seen is a significant amount of demand in New Zealand program, which realistically will be the only investment migration program in the region for a number of years to come. Next slide. Now, the changes were introduced on the 1st of April, which Rabiah has gone through, and New Zealand has had an investment migration program for a number of years, in fact, several different versions, but the changes that were made on the 1st of April greatly improved the program and made it much more attractive to applicants. So those changes modernized the program to incentivize further investment into New Zealand. The current New Zealand government is very keen to ensure that the economy, they stimulate the economy and they attract in foreign investment as a way to do that. They simplified things dramatically. The old program was quite complicated, had a higher investment amount and wasn't well understood. And as a result, it had very poor uptake levels. They've expanded the amount of investments you can make and the things you can invest into, and included more conservative investment like bonds in the balanced category. and they've reduced the time that you need to spend in New Zealand to qualify for permanent residency. And that's been quite attractive to many of the people we mentioned who are running businesses, are quite busy in their home countries and don't have a significant amount of time to spend out of the country. So the fact that you can get permanent residency with as little as 3 weeks over 3 years is extremely attractive to these people. As Rabiah mentioned, the English language requirement has been removed, which is also was an impediment to people from certain countries, and they've processed or promoted this program significantly around the world. In fact, in the United States, for example, they've been promoting this program very significantly, and you've seen that in the number of US applications they've had. One of the most attractive features is the processing time. It's varying somewhere between 15 and 17 days at the moment to be processed, and compare that to the Australian Significant Investor Visa, which at the moment for those in the system is taking 4 years plus to process. So very attractive processing times, great certainty for those who apply in terms of getting their visa quickly. Next slide, please. Now, the big difference between Australia and New Zealand is the attitude of the government. So the New Zealand government are very proactive. They're very welcoming to new applicants. This is Minister Erica Stanford, who's the Minister for Immigration. And she, at the time of the launch of this program, mentioned that they were now trying to attract capital. They acknowledged that capital was highly mobile, and in an increasingly complex world, people were looking for a safe and stable country to do business. And as a result, they're making changes to the investor to make it a more attractive destination to attract talented people and their capital to New Zealand to make a home there. That's a very refreshing attitude from the New Zealand government, and probably the polar opposite of what we've seen in Australia in recent years. Next slide, please. Rabiah mentioned this. I've just updated this as of yesterday, the latest statistics, 267 applications, which will result in about $1.6 billion of investment into New Zealand. As you can see, the majority of people have gone for the growth category. About 78% so far have gone growth, 22% have gone balanced, and most people preferring the lower investment amount, of course, but also the lower residency requirements in there. And as of the most recent statistics, it's about 17 days average, but we've seen cases which have been processed even quicker than that. Now, this is interesting. This tells you a little bit more about the source countries where people have come from. So the United States has accounted for almost half of all the applications so far, which is quite interesting in itself. That differs from most other investment migration programs we've seen, including Australia. Now, Invest New Zealand have told us that those numbers are tailing off a little bit. United States had a lot of pent-up demand, which has come through. Number 2 on the list is China, number 3 Hong Kong, and number 4 Germany. So there've been significant demand from a diverse range of countries around the world. I'm currently in Vietnam at the moment, in Ho Chi Minh City, and we've met a number of investors this week who are interested in the AIP program too. So I would not be surprised to see other countries like Vietnam, Taiwan, Hong Kong start to rise on that list as well when the statistics are released in the next few months. Now, to touch a little bit more on the complying investments for the program, there are 2 categories, as Rabiah has mentioned. There's the growth and there's the balanced. Now, the growth category requires an investment of $5 million. The balanced category requires $10 million, 10 million New Zealand dollars. Effectively, the difference between the two is if you invest more money, you can take a little bit less risk. And certainly what we've observed so far is for those who have gone for the balanced category, they have taken an overwhelmingly conservative approach. So they want to invest in something very secure and safe. Usually government bonds is their preference that we've seen, because the attitude they will tell us is if we wanted to take risk, we would go for the growth category, which is half the amount. So what we've observed so far, there's been actually more people for the balance than I had envisaged. As you say, it's about 20% at the moment. But those who have selected the balanced have done so because they want to take as little risk as possible. And they want to put it into something like government bonds where they know they can sit there, the value won't fall, and they'll earn a decent return on the way through. But for them, capital preservation is the most important thing. The growth category, you have to take a little bit more risk because you're effectively investing into New Zealand companies, either via direct investments into those companies or via managed funds. Now, as Rabiah mentioned, the New Zealand government is very keen to attract investment into New Zealand companies, and they have a list of companies that are on their Live Deals website seeking investment capital. And that list continues to grow by the day. So New Zealand companies can apply to go on that list, particularly if they're in the areas that New Zealand government has identified as important. But what we've noticed is investors' preference so far is overwhelmingly to go into managed funds, because you're dealing with a professional fund manager who will sort out investments for you, will source the investments, do due diligence, do all the negotiations with those companies, and then manage those investments on the way through, which could, for example, require taking positions on boards and so on. So it's quite a time-consuming process. Most investors for this program don't have the 6 months or so required to do due diligence and negotiate with these companies directly. Some do, and some investors have done that. But generally, we find investors prefer managed funds as an option, and they will look at direct investments later when they've got a little bit more time or when they arrive in New Zealand, particularly in the sectors in which they were. All the other points Rabiah has mentioned, so we won't go through. You invest for 3 years under the growth category, you invest for 5 years under the balanced category, and there are lower investment or residence requirements under the growth as per the balanced. Next slide, please. Now, the growth. Starting with the growth, which, as we know, is the most popular option. Growth options include direct or fund investments. The changes they've made are to widen the list of possible investments under this category. And our understanding is the government will widen this further as we approach the end of the year, because they are worried that there's a lot of capital coming into a relatively small economy, and they're worried about all that capital flowing into particular sectors, for example, private credit, which has been very popular. So they do plan to widen the list of potential options to ensure investors have more choice and to ensure that fund managers can diversify the investments and spread the risk a little bit more. But right now, investments into businesses which are in the sectors of technology, food and beverage, infrastructure, which includes tourism and hotels, aged care, renewable energy, and primary industries such as agriculture are permitted. Effectively, you can invest in any New Zealand company, provided that company's business model doesn't rely on what they call a pure property plays or passive real estate. So owning a shopping centre, owning an office building or residential building would not be allowed. However, investing in operating real estate, such as hotels, aged care, childcare, hospitality, etc., that is permitted, and investments in that type of real estate are allowed under the growth category. Next slide, please. So the balanced investments have been expanded as well, including allowing investors to invest in bonds and government bonds. And this, as I mentioned before, is the most popular option for the balanced investors we've met. They would like to invest in the most conservative option possible. They want to take as little risk as they can. And so for them, government bonds is the most attractive option under this category. And that's generally what our fund will seek to invest in as well. Now, the funds must meet, or the investments must meet the principles and objectives of the AIP program. We won't dwell on this too much, but effectively the objective is to attract foreign capital into New Zealand's economy and to stimulate the economy to make sure that it can continue to grow. And the principles are into one of the businesses we mentioned before, which is in something which the New Zealand government want to promote and which delivers economic and positive impacts for New Zealand. Next slide, please. Managed funds, which we've mentioned is the most popular option for investors going in under the growth category, must be regulated by the Financial Markets Authority. The FMA is the equivalent of ASIC in New Zealand. In Australia, we have ASIC. In New Zealand, it's called the FMA. It needs to be a New Zealand resident entity, and all the funds must be held in New Zealand dollars. So the investments need to be in New Zealand companies. Effectively, the investments for the growth category have to be in private markets. So you are not permitted, with very limited circumstances, to invest in listed shares, for example. But investing in companies via debt or equity is permitted. And the funds must invest wholly or substantially in entities with a New Zealand connection. So 70% of the fund must be in New Zealand. There is the ability to invest up to 30% offshore if needed, but the majority of funds will invest all of the assets in New Zealand. I think this is just a repeat of the previous slide, so we may move on to the next one. Now, there is a list, unlike in Australia for the SRV, the New Zealand government approves managed funds and direct investments under the growth category. So in order to be approved, you need to go to what's now called Invest New Zealand. It was previously called NZTE, and they will approve you. They go through a process of a questionnaire that you have to fill out. You have to answer questions for them. And once they're satisfied that you're an acceptable investment fund, they will list you on their managed funds website. And the link is provided below in this slide. I think the slides will be provided afterwards, Farhan. At the moment, our fund is going through this process. We're very close to the end of the process. We hope to be approved in the next week or two. But it's quite a thorough process, which is reassuring for investors. The New Zealand government does go through a strict vetting of fund managers who have approved funds for this list, which is encouraging. As I say, this is different to the Australian Significant Investor Visa Program, whereby the government did not do that in Australia. Next page, please. We've covered a little bit of this. As I mentioned before, the balance category allows a much more diversified approach. You could invest in many things, including listed equities, property development, as Rabiah mentioned, philanthropy. You can donate the money as well to charities in New Zealand. But the overwhelming preference from the investors we've met so far is to invest in bonds, particularly government bonds or local authority bonds, which are considered to be safer investment. For these investors, return is less important, but capital preservation and protecting their money is the most important factor. Next page, please. Now, a little bit about our options. So MA Financial Group, as I mentioned, have been actively involved in investment migration now for over 13 years in Australia. And we've partnered with a New Zealand-based fund manager called Elevation Capital, who qualify for the New Zealand program by virtue of the fact that they're located there and have been for a number of years, to offer funds that qualify under the AIP program. So by coming together, you've got two firms which have got significant experience in investing in investment migration, and in the case of Elevation Capital in New Zealand, we've worked with migration authorities here and overseas for a number of years. All of the stakeholders involved, including industry bodies, migration agents and lawyers, fund admin, trustees, custodians, etc. We currently have between us about $13 billion of assets under management for our clients, and have a very, very strong focus on compliance, particularly for the fund manager for this fund called Chris Wasbrook, who we'll go through in a minute. Chris himself has over 25 years of experience of investing in New Zealand. Next slide, please. So Chris is the founder and managing director of Elevation Capital. He will be the fund manager for this fund and be the chair of the investment committee. Chris is currently on the board of the FMA, the board of the Financial Markets Authority, which, as I mentioned, is the equivalent of, it's the regulator in New Zealand, is the equivalent of ASIC. He's also the chairman of the Auckland Future Fund, which is the fund which has been set up to invest on behalf of the City of Auckland for the future, and also the chairman of the Te Papa Museum, which is the largest and most well-known museum in Wellington in New Zealand. Previously was a partner and co-head of institutional equities at Goldman Sachs JB Weir in New Zealand, and a member of the New Zealand Markets Disciplinary Tribunal. So quite an experienced person who has been well known in New Zealand and has been operating there for a number of years. So quite well known. And Chris's job will be to source investments and manage the investments for us in New Zealand with our support, with the support from the MA Financial Group. Next slide, please. So a little bit about his current roles at the FMA, and the Auckland Future Fund, and the Te Papa Museum, which we'll send on afterwards. As you'll see on the next page, some examples of investments that have been Chris has managed and made in New Zealand. One was the Elevation Capital Global Shares Fund, which was set up a number of years ago in 2008 and has been running since. And the next one is particularly relevant for this fund. It's the New Zealand Rural Land Company. And as you will have seen, rural land or agriculture is a permitted investment for the growth category of the AIP. Next slide, please. So this is an interesting category because it's something which the Growth Fund could look at investing in. Agricultural land. Agriculture is by far New Zealand's largest industry, something which the economy in New Zealand is built. So any fund in this category would have to consider that, given the size of the agriculture industry there. In the case of MA Financial Group, we've got a number of relevant funds which we've managed for a number of years here in Australia. And these funds invest in things like hospitality, marinas, accommodation hotels, education, childcare, and aged care. And all of those categories would count for the New Zealand AIP. So they're particularly relevant for this. The other category which counts is private credit. So private credit is effectively making loans to businesses, and that will also count. That is primarily the focus for these funds because we can ensure that we've got protection, we've got collateral on our investments, and also the time horizon. Given the time horizon here is relatively short, 3 years, it does allow us better liquidity when we need to get it for investors once they get to the permanent residency stage. Next page, please. A little bit about the track record of the funds, which, as I mentioned, we can provide afterwards. So all of these funds are relevant because they invest in sectors that are permitted under the growth category of the AIP. Slide, please. So what are the funds? There are two of them. The two funds are called the Growth Fund and the Balanced Fund. Obviously, one for the growth category, one for the balanced category. They're governed by two different bodies. So New Zealand, Invest New Zealand, which was formerly NZTE, are responsible for the growth category, and Immigration New Zealand are responsible for the balanced category. Target returns from both differ. The growth fund is higher because it takes a little bit more risk. As I said, it's investing directly into New Zealand companies. The balanced fund is a little bit lower. It'll primarily invest in government bonds and quite low risk conservative investments. Minimum terms differ as well, 3 years for the growth and 5 years for the balanced. And the target investments, effectively, the growth fund is a very diversified fund. And we have set the fund up to invest across a wide range of categories in which we have experience, primarily private credit, but also directly into operating real estate assets, such as hospitality, hotels, aged care, childcare, and the likes. So that allows us to have a diversified fund. Given the size of the New Zealand economy is relatively small, we've decided that it's better to diversify the investments and spread them across a wide range rather than having a single asset fund, because the market's probably not large enough to support that amount of capital going into a relatively small sector. Next page, please. So a little bit about the structure of the funds. The interesting thing about these funds in New Zealand is that they will have a trustee and a custodian in whose name all the assets will be held. So the trustee oversees the manager and is responsible for approving all investments made by the manager. The custodian holds all the assets in its name, which includes cash accounts, property, equities, bonds, whatever we hold will be in the name of the custodian. And the custodian in this case is Public Trust, which is a New Zealand government entity. So it's just another step to give investors a little bit of confidence that their assets are secure and they're held in the name of a New Zealand, basically a New Zealand government body. Sorry, next page, please. As I mentioned before, target investments for the fund, primarily private credit, which is lending to New Zealand businesses. We like that because it'll allow us to protect investors' capital and allow us a liquidity within the time frame required under this program, which will be about 3 to 4 years for the growth category. Private credit is something we do a lot of. In Australia, we've got about $6 billion of investments. It's about half of all of our assets under management. So it's a sector we know very, very well. But private credit in itself in New Zealand is relatively small market. So we've decided to have a diversified approach for this, and the fund will also have the ability to invest in other sectors in which we have experience, such as agriculture, infrastructure, tourism assets, marinas, hotels, hospitality, etc. The idea is to be able to spread the investments across a wide range of investments so that we're spreading the risk and not putting all of our eggs in one basket. Next page, please. Balance fund, similar structure to before. This is overseen by Immigration New Zealand, though not by Invest New Zealand. That's really the only difference on this. And you'll see on the next slide, the target investments for this are quite different. So primarily government bonds. We'll be looking to invest in bonds issued by the New Zealand government primarily, and that's to meet investor demand. Investors are telling us overwhelmingly for this fund that they want to invest in sectors of lower risk. Given the amount they're investing, they want to take as little risk as possible. And so the fund will be designed to meet their requirements. Next steps, if you're interested, we've got a web page which you can learn a little bit more on. We've got a flyer as well, which we can send to you via Farhan if you're interested to learn a little bit more. Or otherwise, just contact me and let me know. Happy to chat to investors. We'll be doing a little bit of a roadshow this year with the New Zealand government. They're going to be in the United States, Hong Kong, and Singapore. I'm sure the Middle East will be on their list, and other countries as well as the market grows for this. And we expect demand will significantly grow as people learn about the program. Quite a few, they've promoted heavily in the United States, but less so in other countries. And for now, a lot of people are just learning about the program, and particularly people who were considering Australia as an option, or even those who were in the queue for the SIV program are now actively looking at New Zealand as a really credible option for them to apply for investment migration in the region. The other thing which has gone in New Zealand's favour is geopolitical tensions, as you know, around the world have happened, and New Zealand is seen as a very safe and stable economy, far, far away from most of those troubles. So New Zealand's got a lot of things going for it, and as I mentioned before, is likely to be the only investment migration option in the region for several years to come. So you can go on to the next slide. That's it from me, Farhan. Thank you very much, and happy to take questions.
I think I'm just going to jump in here because Farhan's having some trouble with his mic.
Sure.
So I'm Flora, the associate lawyer here at the Rehman Sheriff Group. Thank you so much, Rabiah and Enda, for that insightful and informative speech, presentation about the Investor Plus visa. I'm sure there are a lot of interest now to move to New Zealand and relocate there. So I guess we'll open the floor to all of our attendees today. Happy for you to either raise your hand and unmute yourself or to pop your questions into the chat, please.
I might just get us started. Rabiah, can I just ask a question for you? Could you just comment on the differences between Australian permanent residents and New Zealand permanent residents, which might be of interest to people on the call today?
Farhan, you can help me out here as well if I spill out. But basically, the difference between a resident visa and a permanent resident visa essentially is that when you're granted a resident visa, it comes with conditions. For the Investor Plus stream, it comes with Section 49 conditions. And so unless those particular conditions are met, you won't be granted your permanent residency visa. So essentially, they come with for the growth category, it comes with a 4-year travel facility. And for the balance category, it comes with a 6-year travel facility. So meaning that you can still come in and out of New Zealand using that visa and you won't lose your residency. But if you don't meet the Section 49 conditions and your travel facility essentially time has finished, then you won't be able to apply for the permanent residency and you may risk then losing your residency visa altogether, even if you've done the investment and whatnot. So that's why looking at maintaining the investment and the presence requirements is really important for this visa, because you don't want to be going through that whole entire process only just to essentially lose your residency. And permanent residency essentially means that you have met the conditions, you no longer have any conditions on your visa, whether it's travel or whether it's otherwise, and that allows you to remain in New Zealand for forever. I think the difference between Australia and New Zealand on that, and again, Farhan, correct me if I'm wrong, is that when you're granted your residency visa, it's generally the same with the 2-year travel facility, and then you apply for a return resident visa.
Can you guys, hopefully you can hear me clear enough? So
Yep.
the travel facility on the permanent residency in Australia, it's for 5 years. And so permanent residency in Australia is indefinite, and you're right, Rabiah, it's the travel facility that expires after 5 years. Now, you can renew that through a resident return visa, but you need to demonstrate ties to Australia. They can be cultural, business, and other ties. Generally speaking, I mean, we do advise lots of clients who, obtain their permanent residency, but then conduct business elsewhere, right? And so we strategically advise them on what they need to do during that 5-year period so they can renew their resident return visa without a problem. So similar, but I think the time is a bit different in terms of how long the travel facility lasts for.
Yeah, that's what we've noticed. Clients here, a lot of whom have Australian permanent residency but don't live there, and for them, meeting 2 years out of 5 is a struggle. New Zealand doesn't have that requirement, so the fact is, when you get permanent residency, it's indefinite. There's no need to renew every 5 years or to prove you spend 2 years. That's a very attractive feature of the program from certainly from speaking to applicants we've seen so far.
I just had one follow-up question. Sorry, Rabiah, to interrupt you. I know there's a few other questions here too. I found it very interesting. So with the English language requirement, with the 188, you used to have to pay a VAC, right, to overcome the English language requirement. So is it just that you don't need to meet English at all for this particular? You don't have to pay any particular VAC to. Okay, right.
New Zealand's quite nice. They don't have VACs, which is really great to see. And I think one of the biggest roadblocks with the previous policy was the English language requirement, which just became too restrictive, especially for individuals that weren't looking at New Zealand as a long-term option in terms of residence. So it didn't really make a lot of sense. And so when the minister was looking at essentially revamping this, that was one of the considerations that was put forward in terms of recommendation to remove the English language requirement.
Okay, thank you, Rabiah. Over to you, Flora.
Thanks, Farhan. All right, so we've got a couple questions in the chat. First question, what are the tax implications investors should be aware of when relocating to New Zealand?
I'll just jump in there just to point out that I'm not a tax advisor in New Zealand, and Rabiah would probably say the same. So we can't give tax advice. I'll just mention the following, however, and we're effectively running a tax webinar soon for investors on this subject too, which will be hosted by Deloitte, who are the tax advisors for our fund. So if you're interested in learning more on this, please contact Farhan, and I'll make sure that we'll share the invite. Effectively, what it seems to happen in New Zealand is when you arrive, there is a transitionary period of about 4 years from the date the visa is granted. And Rabiah, jump in here if you disagree. And during that time, it's effectively similar to what we have in Australia, which is the temporary tax resident situation, where you're taxed on your New Zealand income, but not on your overseas income. So it's a transitionary period, not linked to the visa. It just starts from the date the visa is granted and runs for about 4 years. And during which time investors have, I guess, time to get their tax affairs in order before they come down and become permanent New Zealand residents. So, as I say, we'll be doing a more detailed tax webinar with qualified experts to speak on this subject. And if you are keen to learn more, let Farhan know. We'll share the link. But Rabiah, not sure if you want to add anything to that on tax.
Fortunately, not a tax expert, Enda, so I'd follow your lead on that. I think you're bang smack right.
The other thing to note from in the case of managing funds, our funds are qualified as what's called foreign PIEs, portfolio investment entities. Now, the New Zealand government have set up a tax friendly structure for non-residents to invest, and the pie structure is quite friendly from a tax perspective. The tax rate caps out at 28%, but it's much lower generally on a lot of investments. It can be as low as 1% on interest income, for example. So depending on the income that the fund earns, the withholding tax that's charged if you're a non-resident varies somewhere between 0 and 28%. So that's quite an attractive feature as well for a lot of these funds.
Perfect. Thank you, Enda and Rabiah. So we've got another question from Maria. For someone new to investing in New Zealand, what are the first steps you recommend before applying?
Sure. If I can jump in there and Rabiah join. Look, the first steps I'd recommend, as Rabiah mentioned, is speak to someone qualified, speak to a financial advisor or speak to a fund manager in New Zealand who are qualified to talk about the investments there. Get advice is effectively the recommendation we would have, just to learn as much as you can about the program. Now, in New Zealand, it's a little bit different to what we had in Australia. The New Zealand government does guide you. It gives you a list of the investments, options, direct or managed funds for you to consider. So it's a lot more transparent. You can actually see all of the available options to you. Most investors won't have time to speak to all 46 funds on there, but at least you know who's qualified and who's been pre-vetted by the New Zealand government. But it's important to note the New Zealand government does not guarantee. They're not telling you these funds are approved and we recommend them. They're saying we have vetted these fund managers to ensure that they meet the requirements for the visa and no more. So it is at investors' own risk. The New Zealand government isn't guaranteeing, or they're not going to stand behind any of these funds. But that's a step further, at least, than Australia had, in that they have that approved list for you to check.
Yeah, 100%. Just building on what Enda said, getting the right help at the very beginning is vitally important, because immigration essentially needs to see everything quite clearly. And so if you're, first-time investor or have no idea about investing, I often tell clients, we're happy to help out and provide information about the parameters and the legal framework. But if you're looking at investments and what's considered to be in that, then talking to someone like Enda or a financial advisor is really, really important. So you understand both the type of investments that are available and also the risk involved in these type of investments. And just to give you a bit of an idea about what immigration requires to be submitted with each application is a clear table showing the source of the investment funds or the assets, an index that refers to what the document is and how it will satisfy the investment requirements, a summary of how the funds and assets were accumulated, and also just a clear explanation about how the funds were transferred, or where the funds are if you're already in New Zealand. So that's quite a detailed list, just a snapshot of part of the application process. And so it's really important to get help right at the start.
Perfect. Thank you. Next question. What are the biggest misconceptions investors have about the Active Investor Plus visa process?
I might throw something in here, just Rabiah, you can respond to it. You'll be talking. I think one of the misconceptions is that this is a backdoor to Australia, that, you get New Zealand PR and straight away you can come to Australia through the back door. That's not the case. New Zealand, again, Rabiah will more qualified to speak on this than I am, but New Zealand permanent residents don't really have much more ability than any other country to come to Australia, but New Zealand citizens do. And to get citizenship and a passport, you would need to spend 5 years in New Zealand and spend 240 days a year there. So one of the biggest misconceptions is, I just get New Zealand PR and I'm free to come and live and work in Australia, which isn't the case. And Rabiah, maybe I'll let you elaborate on that. You're obviously more qualified to speak on that than I am.
No, 100%. Exactly what Enda said is that the citizenship requirements for New Zealand are quite different to the residence requirements in terms of the presence requirements. So while you can get permanent residency if you've spent 21 days under the gross category or 105 under the balanced, in order to get citizenship, which would make it easier to travel to Australia or go and reside there, you would need to spend the 240 days in each of the years since you've been granted residency. And also, when you get your permanent residency, to what Enda said, you still need to apply for a visa to Australia if you were intending on visiting even. So it is a bit of a long journey if you are thinking of, coming to New Zealand first and then jumping ship across to Tassie. It still takes a long time. So that would be one of them. And another misconception that I've often seen is that individuals have often been like, I have the funds, this should be easy. And it's not as simple as that. Like I've said a few times now, is that it's quite document heavy, quite evidence based, and Immigration New Zealand needs to see quite a clear plan of where the investments are going, where funds are going, and so it's not as easy as it's made out to be. But in saying that, it's also not as complex as the previous stream, as long as you've got the right help and everything in order.
These are some good misconceptions to bring up, actually, because we've dealt with some clients who are working in Australia who have like a resident visa in New Zealand, and then just assume that if it doesn't work out in Australia, they can go back to New Zealand. But that requirement, again, to get permanent residency status after your resident visa is so important to keep in mind and not to lose that eligibility, from working in Australia. So very interesting. Our next question here, for global advisors helping clients, what's the most valuable advice they can pass on to ensure a smoother process?
I assume you're talking about migration advisors here in terms of migration rather than financial advisors. Just on that, which Rabiah has mentioned, I think from what we've seen, the most important piece of advice I'd give clients, particularly at the start, is to work closely with the likes of Rabiah, with the migration agent, particularly around the source of funds, but also the fund transfer. So Immigration New Zealand are very particular on how you get the funds to New Zealand and how you transfer. So identifying the funds you're going to use in your source of funds and then identifying how you're going to transfer them via the banking system is critical. And this is particularly important particularly for countries for whom there may be currency restrictions. And I mentioned countries like China, South Africa, and Vietnam. That's really important because unlike Australia, the US, and many other countries, the New Zealand government doesn't accept the use of several remittance companies that are effectively money matching systems where you drop money into an account in, say, China, and it drops out in Australia because there's a break in the chain. It's not going in the investor's name via the banking system. They don't permit that, and that's why the number of Chinese applications for this program is significantly lower than Australia had, because Australia took a different view on that. So my main piece of advice is please work very closely with migration advisors, with the likes of Rabiah, who can help you submit that case. And as she mentioned, the documentation and the proof of source of funds, and importantly, the transfer is critical, because we've seen several cases that just get knocked back because they haven't used methods of transfer of funds which Immigration New Zealand are happy with.
Yeah, completely. And just building on what Enda said is, there are different systems, whether it's for employment, whether it's for banking, whether it's for investments, property, assets around the world. They all differ, and they all have different mechanisms and also different processes that where you can actually get evidence from. And also for older individuals that may have been working for 30, 40 years, payroll systems and record keeping has drastically changed over that amount of time. And so sometimes we see individuals who do get stuck when they're, for example, requesting their employment records from various authorities in their own countries. China, again, has been one country where we've seen that it's not, easy to get employment records dating back to 30, 40 years, especially if the use of technology has also improved over a number of periods of time. So it may take a while to actually do a bit of information gathering process and fact finding, but it is vitally important, because any small gap will be brought up by Immigration New Zealand, even if it's very, very, very minute. It's really important that the information is there to put forward at the forefront, because any kind of gaps or any request for information just delays the process further. And so you want to make sure that all applications are decision ready. And that's both from the migration point of view and also from the financial point of view. So working together with both a financial advisor and someone who's managing your investments, such as Enda, is really, really important to avoid any delays and also to avoid confusing immigration.
Thank you, Enda and Rabiah. So I think we'll take one more question from the chat. Are there any particular types of businesses or investments that Immigration New Zealand actually favors?
I might just mention this. So just to note, Immigration New Zealand are responsible for overseeing investments under the balanced category, and Invest New Zealand, or NZT, are responsible for overseeing investments under the growth category. Now, it's fair to say that Immigration New Zealand doesn't really have a preference. As long as they meet the requirements, then they will approve them. There is not a list, though, for the balanced category. It's not like the growth category where you have a list of approved investments and funds. Under the balanced category, effectively, as long as the fund meets the criteria and certifies that, then it will be permitted. A bit like in Australia, where you had to sign what's called a Form 1413D form, which was a statutory declaration from the manager. The Immigration New Zealand does not have such a list. So effectively, there's much wider range of funds which would qualify. But again, investors need to be careful just to ensure that the funds on there do meet the requirements of Immigration New Zealand. So please check that out carefully before agreeing to invest, because, as I say, you don't have the benefit of a list of funds, which you do for the growth category.
All right, perfect. Thank you so much for that, Enda.
Thank you. Now that my audio is loud and clear, really, really appreciated the presentation and Rabiah. And I'm quite certain we're going to have a lot of interest from our clients in this program. There's been some information out there, so I think this session was so important, especially to have someone so high level to speak from an immigration law perspective, but then also the investment side. So I really appreciate you guys coming today. We will certainly send a copy of the slides to all the attendees. And if we do have anyone asking any further questions or inquiries, we'll definitely connect them with you both. So thank you so much again, guys. And hopefully we can do this at a later time, if there's any further changes that come about in this landscape. Thanks, everyone, for coming.
Thank you.
Wonderful.
Thanks,
Thank you,
Farhan.
Farhan. Thank you, team.
No worries.
All right.
Thanks, Rabiah.